Hello everyone and welcome back. In today's video, we discuss stock, commodity and crypto markets right now ahead of the FOMC meeting on Wednesday. We know there's going to be at least a 50 basis point rise, but the question after that becomes what happens to the market next? Is it a buy the fact, like last time back in March, or are we going to sell the fact and move back down? What just happened on the Monday close might tell us a little bit about how the market is positioning into this event. Stay tuned, there's a lot to discuss. Well, welcome back everybody to our daily market recap show here where we cover off on stocks, cryptos and commodities every day of the week. If you are interested in those markets, please remember to subscribe and smash that like button. This is for the market close the 2nd of May 2022. And you'll notice here we have still got a pretty big reading on the fear greed index. That is, people are fearful in the market. This really comes into play when we start to look at surveys. Now, if anyone was watching our live stream, we do every Monday for the open, we brought this up and we discussed it in the previous session. That is that there is an incredible amount of bearishness leading into this week. 59.4% of people believe that the market is bearish, or at least they did on the sentiment report on the weekend. This is in comparison to the normal 30% bearish, 31.5% neutral, and 38% bullish. So with so little people being bullish in this current market, what do you think the market might do next? Well, this is where these surveys come into really understanding that the market is great at trapping us, the retail traders. Remember, on the 31st of March, this is the report here that was published. And at that point, 32% of people were bullish, 40% had no idea, they were neutral, and 27.5% were bearish. What happened past that point? Unfortunately, the market dropped off. So these survey reports can help us to get a bit of an understanding on what market conditions are and where we should be placing our positions if we see the right signs in the market. That is, we see their footprints showing up in the technical analysis. Remember what Wyckoff said about the composite man. He said, if we think of the market as an entity, and that whole entire entity is basically working against us, can we see where they try to trap us? If we can we react to that? Something that's really important and something I want to cover here on the channel a lot more. So make sure you subscribe because we will be releasing a special series soon covering off on all this information. Let's talk about actually what happened in the market though. Straight away, I can tell you we had a pretty big movement across the board, and it wasn't what it shows at the end of the day for the whole day. We moved lower at one point and then finalized bulling up into the close. Semiconductors clearly had a decent day and other sectors were all around the shop. So let's have a look here at the markets to understand what occurred. So we saw an initial rally in the hour of power. That is the retail hour of power. We saw a dump followed by a rally, hitting the resistance we talked about in the live stream, and then shorting off that resistance with a beautiful 15-minute rejection wick candle. A big shooting star was present there. It then proceeded to go down 1.5%, getting very close to the 100 SMA on the S&P 500 we'll take a look at later. And then all of a sudden, something changed. In the last hour, where retail doesn't usually trade, and of course the big guys come in, they bulled and they bought the positions up heavily in that last hour. The close is the key, as we often say in this market, and it seemed for the first day in a while that the big players were prepared to buy in. And not only were they buying in, they were buying in sectors that have been much unloved for a while. Semiconductors, 2.9%, XLC communications. We also had technology, 1.52%, and even biotech. So all of the smash sectors coming into the Wednesday session were actually purchased into the close over the last 24 hours. That's certainly very interesting. Let's have a look at some of the reasons why they might be purchasing in. And this doesn't mean that, of course, this is the long-term approach of what's going to happen in the markets, but certainly what they did over the last session. It can give us insights into the next session and maybe moving into this federal funds rate. So firstly, valuations from FANG stocks, are they down? Well, yes, they're actually back to where they were in terms of PE ratios to where they were before this entire pandemic began. So as a valuation, these particular stocks have actually come back and they're a little bit more fairly valued than they used to be. That's probably good news for people looking at these tech stocks. Now, there are often bad news stories, and of course the bad news at the moment is the longer we see inflation occur, and especially the US 10-year going up, that is, if the US 10-year continues to rise, and we'll talk about that later in today's video, it's not going to be positive towards these stocks. But if that starts to drop, what do we expect happening here with the FANG stocks? They could actually start to rise. So we need to be watching the 10-year. And if you don't already do that, it's something that I would put on front of your charts and start to understand it, start to think about it. S&P 500 PE ratio versus the historical average since the 1950s. Let's take a look at that together right now. We know it's dropping. That's, again, good news. Remember, I know that we look at this market and we think, oh, well, we'd rather it goes up. What do you mean good news is coming down? This sucks. It's because if we stay above these 2+ standard deviations away from historical averages, the chance of an epic recession, which some of you probably already believe is occurring right now, is incredibly high. And already it was getting to points that, really say we either need to flatline here a little bit or come back down, or we're heading for another internet bubble style situation, or even worse, some kind of GFC style event, which some people again believe is already here. S&P 500 values relative to interest rates over time, an interesting chart here showing that actually we're about right in terms of valuation there. This is a bit questionable because obviously it's in relative terms to interest rates, but I thought I'd just put it in there just to show some interest. Another thing that the community likes to do here, and obviously we really appreciate that, is we look here at the S&P 500 drawdown after it goes through the 50 EMA. And one of the community members did this, Gary here, and he found that generally speaking, 85% of the time after we went under the 50, we went and reached the 100 SMA. Now we got within about 5 or 10 points of hitting that in the previous session with that big drop off. So have we just found a bottom, for at least for temporarily ahead of the Fed? It seems that that could possibly be true. Let's move over here to Q1 earnings. Obviously, the beat data has continued to come in, and we're still sitting around 76%, with beats sitting at 598 and misses sitting at 196 or 186. That's not too bad. That means that the US economy is generally holding up in terms of the earnings data. It's just that the valuations are getting smashed, and that's really the biggest story here. It's more of a declining market due to people feeling fearful, obviously stimulus getting taken out of the market by the Fed, and we'll find out what the statement actually says in it. Will the Fed give a market a bit of an idea about how many more rate hikes it expects to do in 2022? For the big news for the week ahead, we've got AMD, Moderna, Airbnb, Starbucks, plenty of big news stories, a lot of fairly large hyper stocks here as well, with things like Square or Block and DraftKings coming out later on the week, Twilio, Etsy, etc. So I'd expect it to be a big week in terms of hyper stocks. That is any of these really high growth, high PS, high PE ratio types of stocks, which obviously aren't as high PE as they were. They've been sold almost barbarically into this. They're getting destroyed. And because they're getting destroyed, what we sometimes see is the market actually sells into these events, and the earnings is better than the market is pricing in. So some stocks may actually bounce considerably this week during the earnings reports. And I think you've got to be careful about that, especially if you're trading it without proper risk management either way. If you're shorting into those stocks, be very careful. Some of these things have 20 or 30% implied volatility moves in the day. That's incredible, and you've got to be careful there. Some of you will, of course, be looking at that and saying, well, I'm going to take advantage of it. We spoke about the VIX hitting peak fear. So that is hitting around that 35 level. That is what occurred. And as soon as it hit that level, what happened? The market reversed. So the market was down, we hit 35 plus VIX, and then all of a sudden, boom. Now, that was certainly a level that we were looking at. We wanted to see the VIX hit 35, because once it hits 35, it means that the story of fear is kind of hitting a very important point. If you actually overlay this onto the S&P 500, you'll notice that when it hits these levels, often the market will bounce. Now, it's a dangerous type of strategy, but it's certainly there. You're buying fear. Effectively, you're buying what Warren Buffett says. He says, be greedy when others are fearful. Well, this is a good representation of that. And if you know how to use it, you can certainly spot it on the charts. But that's what happened. We hit 35, we've dropped off, and we've started recovering here on the market. There's a few reasons why that's occurring. Another thing into the Fed meeting is we're hitting the 3% again on the US 10-year. So we dropped, we've rallied, and we're at a point of resistance ahead of the Fed meeting and the Fed statement. Put this out to a weekly, we'll see what's at stake. 2018, obviously the market got back to 3% on the 10-year. 2013, we got back to the same point. So we're back at a key resistance. Obviously, we're going at an incredible pace up to this point. Will this be the turning point for the 10-year? If it is, and it starts to decline, again, if you like technology stocks, this could be a really great sign. So do not discount the 10-year, guys. You've got to be paying attention to it. We all do in the investment world. You can ask any of the big investors out there that run hedge funds or investments or whatever. They always watch the 10-year. The 10-year is dictated by the market. The 3-month and the 2-year yields are dictated to by the Fed. They're the short dates. PCC. So we ask ourselves the question, if we hit peak fear, did we just hit a lot of puts? Well, we can see that puts were uncharacteristically high in the last couple of days of trade. Lots of people trying to go short on the markets. And if we scroll back over time, we know that when the PCC hits these levels, we can use it as a bit of a contrarian concept. That is, if everyone's bearish on something, they add a lot of bear put positions, the market may not want to pay those off. Remember, only a few weeks ago, this wasn't anywhere near as high as it is now. A lot of puts in the system sitting around 4,000. So that's 400 on the SPY, 405, 410 on the SPY. Quite a few sitting around there. Let's move over to the dollar index. Another thing that is characteristic usually with the market and fear is what we've been watching here all the way through April, which has been incredible strength in the US dollar. The US dollar is on an absolute rocket ship right now. Ahead of the Fed meeting, it's hit a resistance. Funny how markets do that. They always gravitate towards a key resistance or a key support. Here it is, and you can see the resistances that have been found in the past. Resistance, 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 somewhere around here ahead of the Fed meeting. No surprises. Is this a buy the rumor, as in put money in cash, and then get out of cash and go into the market after the fact? That's something we don't know yet. But certainly it looks like this party has been started. Everyone's involved in it. Everyone's suddenly feeling incredibly strong in the trade that is the US dollar. And we'll have to find out whether it's just topped. And we'll watch this over the next few weeks, because if money starts coming out of cash, a logical conclusion is that it could be going into the stock market or some other asset class. And we want to be obviously watching that. Let's move over to US oil. US oil continues to decline here. Obviously a series of lower highs. We've seen a bit of fighting between oil buyers and sellers. We had a shooting star here, followed by a bullish hammer. If you put this on a 2-day, because remember the markets are fractal to a degree, let's have a look here. A long leg doji is what it ends up looking like. So basically there's some indecision here at the lower high. And for now, it still looks like oil is mostly short, but we don't know whether it's going to break out or not. Be careful here on oil trades either way. It's clearly undecided about where it wants to move. If I had to guess, I would think short, but that's more of a guess than a known thing. Let's move over to gold. Gold's, of course, dropping. It's getting really obliterated. US 10-year going up, not actually that good for gold. Popular, except that goes against what a lot of people popularly think. And gold has really rejected again this zone. So it rejected that 1920, sold off, created the daily kind of rejection, and then sold off aggressively in the last session, making a new low. If you've been thinking about gold, ever since it hit this level up here, which we were obviously bullish into that level, we've mostly not liked gold. And unfortunately, the problem with gold is that 90% of the time, it's a tough trade. 10% of the time, it's really good. And 2% of the time, it's amazing. So we'll really update you when we see more things on gold. But at this stage, obviously, it's been mostly short. And this has just been a sell the rip off that previous support, which we have spoken about, 2050 cross, all of these things. Let's talk about Facebook, because everyone hates this stock. Probably, or Meta platforms, or whatever we call it now. So I think that's probably fair. But we've had an earnings announcement out of it now. And this was something that I've talked about in the last couple of videos. What if we saw a Max Pain scenario? That is, that the footprint of the market basically created some kind of really nasty short, making us all believe as retail traders that the stock was stuffed and it's going to a new low, taking out stop losses, and then during an earnings report, rejecting those and going up. Well, that's where we are with Facebook right now. Meta Platforms is kind of looking potentially towards that 230. And you can see here, we've got a nice little structure that's formed through the last couple of days of trade. So we've got kind of a pullback initially, a rally, a pullback, a rally, a pullback. Will we breach out of this zone and then start to continue to move up towards that 230 resistance, 235? It seems more likely. I think one thing that's interesting about Facebook is because of the earnings result and the fact that it's so heavily sold off on the left-hand side, it's been reacting better than the rest of the FANG. So let's have a look at Facebook in relative terms compared to the rest of the FANG. And if you go to a weekly here, you're going to be horrified at this. Check out Facebook's return versus the FANG over the last couple of years. It's just been a horror show, yeah? But all of a sudden recently, it's picked up. It's kind of bottomed out in terms of its underperformance, and it seems to be performing a little bit better. Now, that doesn't mean I like Facebook for long term. I think Facebook's great or anything like that. It's just, this is one of the ways that you think about things in the market. Relative performance to some of its peers. And it does look like Facebook's got a little bit of strength in it here from the market. Time will tell. Certainly an interesting chart to go in and of course think about. So Tesla, will move over to that. Tesla, we've seen a huge amount of selling because of Elon Musk buying Twitter. Obviously, he sold portions. He's since said, I've finished selling, guys, don't worry. And we've got the market kind of making a low here. It's made a higher low and it's going and putting pressure on that 900. So I think the next step for Tesla is if we breach through the 900 with a nice close here on the 1 hour or 2 hour, we should be able to make it through, hopefully, to the previous resistance that becomes previous support that becomes resistance. So this is going to be an interesting area for us to be watching over the next trading days. And if you're feeling bullish on Tesla, I think there are cases to be made for in here for your systems and for your thought processes, because it could very, very easily get through and move up. And I think that comes into play when we look at the Nasdaq a little bit later. Let's move over to Apple. Apple, another one that's gone to a new low over here, and then it's rallied up through the last session. It wasn't that strong, only up 0.2. Some people are going to look at this on a daily and say, look, Tom, that's a bullish hammer. I see it. And I think it's, again, a fair kind of concept to say, well, we've seen a bullish hammer. Obviously, if you're feeling bearish and you see a short underneath that bullish hammer, you know it's on. And at that point, bang, we will go down, because that's basically reversing a lot of people's psychology. But I think a lot of people expect it to come out of the gates relatively strong in terms of the rest of the market and potentially have a little bit of a rally up. Remember, what's happened here is the market's aggressively sold off, and maybe it's time for a bit of mean reversion to allow other traders to potentially short, to allow puts to expire worthless that were entered by retail trades, and to change the sentiment. Remember, everyone's suddenly bearish according to the survey. So if everyone's bearish, what would the market like to do first? Well, let's go opposite to that, maybe move up a little bit and ruin some people's psychology, or particularly maybe it was a bait and switch, and move it through. This is what we're looking for in the market. Remember, if you have a trade system that's really designed around being disciplined, waiting back and noticing when the market takes advantage of other retail traders, then you can be more successful in trading. At least that's my opinion and the way that I've always looked at it. Being disciplined and waiting for your time and waiting for those traps has often been some of the best trades. In fact, it is the best trades I take. So if we think about this, we've got a downward trend here, very big DAX downward trend, obviously some form of big fall down here, could be a max pain showing up. And if we breach this downward trend, could that mean risk on for the rest of the world as well? Is this a huge trend line? I think it's pretty big. We've clearly paid attention to it. If it does keep selling off there, so be it. Would I try selling that trend line? I'm not too sure if I would. But if it breached to the upside, I think that would show us quite a lot about what the current sentiment is in the market. Maybe that will give us the clarity we need to find longs across the world. IWM, this is where things get still very nasty. We have to say, calm down. It's only been 1 day of up. Does that mean the market's really going up? Well, at this stage, no. I mean, you can see here on the Russell, the whole thing still looks negative. We're underneath the lows. Rallies should be met, you would think, by some form of sell demand. It doesn't make sense just to go boom without some pullbacks throughout. It can't do that. You know, there are going to be sellers somewhere here. And the way the market works is if it doesn't really want to sell off, let's say they don't really want to sell off and pull it down to the 170, then as it rallies, it's still going to sell off, but what it might not do is make new lows. So it might go bang, 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 get rid of all the sellers and then move forward. Remember, the market likes to box or structure up before big moves. So IWM still looks quite negative even after the last session. This is where things get interesting, the Nasdaq. So we do have a downward trend. We've got those last two peaks. We have obviously a resistance that seems to have formed around 13,500 and a bit, 500 and whatever, 50 or something. We have a potential here where the market went short, trapping people into short positions, and then it will most likely reverse that and possibly push higher to put pain on these sellers, even though they might be right in the future. Got to put pain on the sellers first, yeah? To allow the market to go to certain levels. Now, whether that's 13.2, previous resistance, or whether that's hitting the trend line, or whether that's even hitting 13.5, we don't know. But certainly these levels I would have on my charts. 13.2, 13.5. And I'd be looking at these levels to see whether we have sell the rip principles. Do we have sell the rip principles here and here? If we do, and your system shows those kind of signs, well, these are levels that people are going to target in. Remember, we had a massive switch yesterday. It was a bait and switch. Let's take a look at this on a 1 minute chart just to show how much of a bait and switch this was. Look at this. Very nasty. So they push it down all day. They go do. They rally in the morning. They push it down and they create an instant bait and switch. Bang, straight back up. And if you take a look at this on a 15-minute chart, you'll see the two trades that a lot of people took. So a lot of people looked at this market and they said, okay, we've got some resistance, some previous support, which is sitting at 13,000 psychological level. So support. We did this in the live stream, so we obviously talked about it. We saw it move down, rally heavily in the morning, come up to 13,000, shooting star 15-minute, then shorted off, and then found a low during that session and then fully reversed it. So there were trades here towards the short. There's the sell the rip. So the rip happens in the morning, it hits 13, previous support becomes resistance, the market says yes to that. Then all of a sudden the market by the end of the day rips so high that it breaks this level. So then it needs to go to the next level. Makes sense. Probably needs to go to at least a 13.2, previous resistance. Will there be selling the rip here? I think someone will give it a shot. Or do we go towards that other trend line, which is 13.5? These are the two levels that I'd be watching a lot if you're considering selling this market. S&P 500, very similar. You'll notice where the 100 SMA is here, the yellow line. So it got very, very close to that and then bounced. Many people will look at this as a bullish kind of hammer. Let's take a look at it on the daily here. There it is, bullish hammer. Where are the key levels here for the S&P 500? Let's have a look together right now. So we have a big key level at 4,200 and we have a huge key at 43. So I think these two levels, again, if you're thinking about getting involved in the short and you believe that this market is still generally sell the rip, these are the market areas that you're looking at shorting. Now, if you're feeling bullish, do you really want to go into the Fed with open positions? Well, this is a question you've got to ask, but obviously I think for a lot of people, this is the key point in the future. If the market does something like this, and it breaks through 4,300, I feel like at that level, we'll be breaking the downward trend line on the Nasdaq, we'll break sentiment, and we will have inflicted max pain. So if you're feeling really bullish on the market and you're putting positions in, it's an interesting concept, but we need to get back to levels that make a lot of sense. And 43 is where we break that downward momentum trend. Unfortunately, that means you can't usually get the lows. If you're getting the lows in trade, you're trading smaller timeframes. They all have different take profit levels. But if you're trading the big time frame, the one that the big guys trade, they're going to be looking at key levels like 4,300 in the future and looking at placing positions in advance of that. Remember, 4,300 was the previous buy signal. Will 4,300 be the new buy signal? It's a massive level throughout this market, and you can clearly tell when you look at it in this way. Max pain for the week ahead, if we look at the 5th and we're thinking of the expiry, basically we've got here a whole bunch of different max pain levels. It looks like it's 437. Don't bet on that necessarily happening. It doesn't always do so. And in terms of Bitcoin, I still think Bitcoin is completely rudderless. It doesn't know what the hell it wants to do. And in general, the only thing I look at is BTC shorts here. And I say, well, you know what? I'm not convinced that the Bitcoin market is looking that good, or the crypto market, when the nasty whales continue to short Bitcoin. And that's putting pressure on every single one of the cryptos out there. So there's not much direction here in Bitcoin. Obviously, the S&P 500 is starting to get really exciting. And please do remember, you need to come and obviously look at the news on Wednesday, because you're going to need to know what the Fed's doing. That's going to be a volatile day. Expect volatility in the market for around that 2 p.m. New York time and 2:30 p.m. press conference to be extreme on the 1 minute, 5 minute chart. And it may be something you don't want to necessarily stay into. If you haven't already followed us, come and follow us at FX Evolution on Twitter. Thank you very much if you are following us there. And remember, we do have the big rate here, 2 p.m. New York time FOMC statement and 2:30 p.m. FOMC press conference. Thanks so much for watching. If you've enjoyed today's video, please subscribe, smash that like button, guys. And we'll see you in the next one. Bye for now.